Clover Health slides 23% as Reddit trade finds new targets. Clover slipped to $16.92 when the day ended as retail investors on Reddit set their sights on other targets. The stock rose as high as $28 per share earlier in the session. This was reported June 9th. When did I make my video? I made my video on June 9th. Before that was even uploaded, actually. I made it on June 8th. What did I tell you? I said what? You can't expect. I just say expect a dip, yeah. I said why? Because a dip. I said expect a dip. But I did also say I wouldn't be surprised if it hits 22, 23 tomorrow. Two things that I can say on that. Numero uno. Why did it dip? The same reason Bitcoin dips, the same reason any stock dips. Retail traders who don't know what they're doing, who don't understand what they're investing in, are jumping in on it. And then one person sells and it's a domino effect where everybody else sells because they don't understand what they're investing in. And that's why I made the first video trying to explain to you exactly what Clover Health Investments is, so that when you invest in it, you understand what it is and you can make your own decision if you feel like it's still an investment for the long term. Numero uno, take profits. Let's talk about taking profits. Taking by Black Bezos. I've extensively invested in the markets and have done so through multiple different assets. Long-term investing in a fast-paced market that can be tricky at times because profits come fast. Yes, it seems ironic and funny, but we must secure these profits. We all know of the stories of how people have made large profits and they have evaporated in a matter of months. Think 2017 cryptocurrency. Think 1999 dot-com bubble. And this is all because of the human tendency towards greed. Secure the bag, buy low and sell high. Such a simple statement, yet too many people fail to apply it. Many actually do the exact opposite. The cash I generate through profit taking will be kept as fuel to deploy into the market should the market give us that opportunity. We always have an ace up our sleeve. Buying absolute bottoms and selling absolute tops is a myth, which is why in most cases I'll be scaling out of positions. Why should you take profit? Knowing when to take profit is one of the key factors that distinguishes profitable traders and unprofitable ones. In order to know when to take profit, it is important to have a plan before entering a position. Ask yourself, why are you entering the trade? Where do you expect this trade to take you? What's your plan if the market turns against you? Tread carefully. The volatility of a fast-paced market, such as the one that we are going through right now in the cryptocurrency market and the one that we are going through right now in the stocks market, is a double-edged sword. Multiple 4 to 5% moves within the span of minutes, an hour, with occasional 40 to 50% spikes are commonplace, something unheard of in traditional markets such as gold or commodities. Crypto markets, these current markets are also much more accessible because most exchanges don't require minimum balance to start trading. Combining these two factors, we end up with a situation where inexperienced traders can be presented with a life-changing financial opportunity in the form of volatility, but sometimes newcomers fall into the trap of letting their emotions dictate their trades. Controlling your emotions. Take profit strategies will not work if you can't keep your emotions in check. Try not to let yourself fall into the routine of waiting for more gains after your profit targets have been hit. We saw the results of this kind of mindset in the 2017 crypto bull run, 1999 stock market bubble. There are many other stories where traders sat through their massive gains without taking profits, and when the prices turned, the traders saw their whole portfolio dwindle. Keep your emotions in check, make a plan and stick to it. Strategy. Some people like to exit their entire position at once, while others prefer to ladder exit orders across a range of prices. So taking 20%, then taking 50%, then taking 75%, then taking 100% as the prices rise. If you're in the latter group, it's important to always set a stop loss in order to prevent losing gains. Here's an example of how to set a stop loss. I'm going to use crypto for example. If you enter one Bitcoin long position at 33,000 USD and exit 50% of the position at 40,000 USD for 3,500 profit, you could set a stop loss at 30,300 to prevent losing money. Later on, if you see Bitcoin starting to weaken, you have the option to close the original order completely by setting a stop loss order at break even. You can ensure you won't lose any money on an already profitable trade.